Welcome to today's video. We're going to be covering the downtrend break strategy. I'm going to show you guys what type of stock that you need to look for, the structure of the downtrend break, some rules that I have set for the downtrend break or the boom boom bang, however you want to call it. And then we have the execution. If you haven't already, hit that subscribe button. It's free. You can always change your mind. You can learn how to trade. You can keep up to date on your cryptocurrencies, and you can find out what stocks I'm watching for the coming week. First, we're going to cover what kind of stock. And you have to find these either with your own scanners or if you're in a group, but what stocks? So the first thing you want to look for is a stock that has less than 75 million in float. Just because you want it to be able to move somewhat, you don't want it to have a really high float. And that's being conservative. I mean, I kind of don't want to trade stocks over 50 million float. You want to have at least 5 million shares traded in at least 2x relative volume. The 5 million will make sure that you are going to get enough liquidity, you can get in and out when you want to, and that 2x relative volume is going to make sure that other traders are watching it and therefore could validate your trend and validate your analysis even more. And finally, you want to have good news. So now that we've covered the structure of the stock, you can find these, come on my YouTube Live, TikTok Live. I'll give out these stocks for free. I'll go over my scanners, what I'm looking for, and you guys can trade this strategy with me. Now that we have that criteria set out of the way, let's go ahead and cover what kind of structure we want to look for. So obviously we want to first have a downtrend to play. And that's a little too steep for my liking. I don't like trading downtrends that are steep like that. So we got our downtrend. So now that we have our structure, we have our first point, second point, third point, and then our fourth point, and hopefully this is a break. Usually, after our fourth point, if we have the right volume and price analysis, I will cover that later in this video. But at the fourth point, you will have an 80-20 setup with an 80% chance of breaking to the upside. And that's all we want to see here. And once you get more experienced in trading this, you'll be able to trade this, but on the third time, and possibly on the second time when the downtrend hasn't even formed yet. So as more experience you get, the better you will get at becoming profitable with this strategy. Now, when you are looking for an entry, you are going to enter on this bounce. Now, or this bounce again, you have to look for a potential double bottom, a doji candle with high volume, maybe an inverse head and shoulders pattern. Something else that I'd really like to look for, but it's not required, is a RSI that is oversold. That means below 30 RSI. Now let's go ahead and take a look at the volume as we come down into this fourth point. And usually we want to see some prior support or resistance at this level so we can get more confirmation that we are going to bounce. We do not want to see this downtrend come down, bounce off, come down, bounce off. If it comes down and bounces off and comes back up, this is more of a descending triangle. It has an 80% chance of breaking to the downside. So you want to see these lows getting lower, but not coming down and getting stopped at one level. Now, when we look at these two lows before we actually break the downtrend, we want to see high volume on these lows. And then maybe a potential, we want to see really high volume, because if we see high relative volume compared to the other volume bars, buyers are now looking to take this price even higher, and now we're fighting to push it back up above the downtrend. What I would be looking for is a potential doji candle, maybe, or with a really long wick with extremely high volume. If we have extremely high volume with a doji candle, that's extremely bullish because the sellers brought it down, buyers brought it straight back up in that area. We're on the fourth touch of the downtrend off a double bottom. There's multiple reasons to jump in this trade. And again, now let's go ahead and cover our execution. We have TP1, take profit 2, and take profit 3. Now all these levels are just the previous high, so it's pretty simple to understand. Now, when we have this doji candle at this area with that increasing volume to get confirmation, that's when you would want to enter. Your stops would have to be below this support level. Now, as soon as we see the stock kind of come back, maybe form a higher low, break the downtrend with increasing in volume to validate the trend higher, immediately, if our entry is up here, we are moving our stop right to break even. We do not want to have a winning trade turn against us, so we will always move our stop up. And again, you always are going to risk less than 3% of your account. This is more than what you will risk on any given trade. And let's say your stop loss has to be, let's say 6% away. Cut your position sizing in half. So you're still only risking that 3%. And 3% at most. Now it's up to you how you want to take profits, but I like taking maybe a quarter out, then another quarter, and another quarter, and then letting the rest ride if it continues to move in my direction. And every single time the stock pushes up, let's say breaks over our price target, makes a new low, pushes up, every single time our stop loss is going to get moved up a few cents below the low, then below this low, and then as we continue going, and we're taking a quarter out as it continues to push up. Because what we don't want to see, and why we have that kind of in the stop loss so close and we're moving it up and we're taking profits at these previous highs, is because we don't want to see a double top. And finally, let's cover our entry requirements. Now, the first thing we need to look for is, again, at least 3 touches on the downtrend. 1, 2, 3, and on the 4th touch, we will take our entry. Then we want to see a reversal pattern, either a double bottom, inverse head and shoulders, a doji candle with extremely high volume. Ideally, we want our RSI to be oversold, but that's not always the case. So we want to have it under 50. Our stop loss has to be less than 3% away, which means that our take profits has to be more than 6% away. If we're risking 3, we need to see a transition from light volume on the parts where we start to move up here and here, to we want to see increasing volume on those, so we can actually validate that, okay, buyers in this level are now looking to take this higher and break the downtrend. The downtrend breaks are pretty simple. You'll get pretty used to it, and it's a great strategy to continue to trade with if you're not looking to trade the bull flag or bear flags. I love this strategy. If you guys haven't already subscribed, consider subscribing. It's free. You can always change your mind. You learn how to trade. You can stay up to date on your cryptocurrencies, and you can find out what stocks I'm watching for the coming week. Anyways, I'll see you guys in the next one.